Okay, very good. Welcome, welcome everyone. Should be able to hear me, and you should be able to see the screen here. Welcome to the FX Street Tokyo Open Live Room. Today is Monday, April the 18th, 2016, and it's 7 p.m. EST time here in Toronto. I hope you had a great day. In the chat here, and I hope to find many of you happy and ready to go through this review. Welcome Todd, Adinda, Sinatra, Dion, Desi, Leib Lopez, Planet 372, Matthew, JM, hi Kerry. We have the Grace as well. Welcome. Welcome everyone. This is the FS Street Tokyo Open Live Room, and we had some news coming in yesterday. As you know, for those of you who is the first time you're here with me, this is a daily show that features real trading, real levels, real target levels, real trades at the very heart of the Asian session daily. This is going to be with me, Giuseppe, also known as the FibStalker, and this show is now being held from Mondays to Thursdays weekly and daily at 7 p.m. starting now at 7 p.m. EST for 45 minutes, 7:45 p.m. All right, so thanks a lot for joining in. Hi, everyone. I'm very well. Thanks, Todd. Hi, Marco. Hi, Kerry. Thanks for joining in. So note the new schedule here is going to be from Monday to Thursday, and I hope to see you every day here. So thanks for joining all, and just a quick hello to all of you. Just for those of you who do not know me personally, here we go. Thank you very much. Welcome in my trading room, and we're going to review these markets, and we're going to look at what's going on now. We're going to look at the levels that have been trading in the last week, in the last few days of last week. Thanks for your kind messages and tweets. And as you know, if we had to get confirmation, you got this confirmation last week as well, that the levels we features are relevant to what we do in our trading. Okay, so thanks for joining in, and off we go. Before I start, let me bring you back to the slide here, just a moment here, because as you know, and those who know me know that I take risks very, very seriously. In fact, success in trading, it's all about, in my belief, risk management. And trading can be risky, and it is risky. Because trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail of exchange transactions involve substantial risk of loss, and it's not suitable for investors. You may lose all or part of your initial investment. Leverage can work for you as well as against you, and it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FX Rate risk disclosure on the website, and I've heard that the new website is ready to be launched. There'll be some changes and little stuff and snags to manage, but I believe it's going to become a great experience. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The information I provide here and the material is for your general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FS Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. Right? This is the common disclaimer. You're already in the chat. In case you cannot open the chat, go back to the video. You can also choose here the quality of the video if you want to see better, want to have a better better definition, you can use 720 HD. And if the chart goes, you can go back to this page, refresh the page, and choose chart again, right? Normal stuff as usual. So let me dive right into the charts. That's what we are here for. So let's look at the charts here. So welcome everyone. We have again. Let me refresh here. Let me say hello to everyone. Welcome Pantelis, Arinda, Todd, Sinadra, Dion, Marco, Label Oberts, Planet, Matthew, JM, Kerry, The Grace, Pantelis. Thanks for joining in. So we're going to start from very quickly review some of the markets before we get into Forex. Of course, this is mainly Forex, but I like to review other markets as well. Last week, you remember that we called higher price in the SP 500, and I also mentioned a target, and that was actually 6 days before today, and the target was 2089. Today we had basically one tick from that level. All right, so congrats to all of you who traded long the SP 500. That's where we got this market from current levels here. So this market is a previous highs. What can happen now? We can see this price moving above current levels. I think this market has still another stub. Let me have a quick look at it. This market might have another stub above current levels, maybe into 2100 here. But at this point, we have to think that this market is going eventually to break above new highs. And you might be asking, who's buying SP 500? Who's buying equities? Well, you would be surprised, or you might not be surprised, but companies, big corporations are buying back their shares, and 70% plus of the current volume we have been seeing in the last few months comes from, and years as well, comes from corporation. So basically we have the average Joe is actually scared and is coming out from the market, and big corporations are buying back their shares. Okay, so that's the reason if you see this market continuing higher. Very briefly, gold moving laterally here, and that relation with the dollar index might finally break whenever that will stop manipulating gold and silver prices. And mind that especially silver prices are very sensitive to, but I would say gold as well, very sensitive to the stock market, the stock market price. And what I mean here is that due to the derivatives that are calculated on gold and silver, price of silver and gold might be more related to the actual derivatives created on them rather than the actual price of the physical. All right, but it appears there is a squeeze in the US and Canada when it comes to silver, especially. It appears that the two countries are not able to mine, and the Australian mind, the Perth mind, is coming in trying to help, but they sell their coins very, very quickly. All right, so what do we do with this information? Very little. In fact, what I do and what we do, we trade levels, we trade areas of potential participation from algorithms. That's what I want to look at. And when I look at silver here, I want to remind you that we have a target at 1660, where you probably want to unload a little bit of your position. All right, and I'll certainly do it. Mind that we've been through this market with participation around 14, retest of that area, participation, bam, into first target. We're having this lateral correction here since mid-end of last week here, and I believe that we still have one more step to go, and maybe the SP 500 will help that. All right, so any questions in relation to any market you are following at this moment? And I will start from the euro dollar here. We left the euro dollar last week, and after the big drop we saw middle last week, we mentioned that this market could actually pick up and trade 1350 before a continuation lower. Now, continuation lower depends also on what the dollar index is going to do. And as you know, the dollar index is very, very important. We focus on that as well a lot, because my offer as information on what could happen next. Now, you know that I've been looking for this 94.35 to be retested now since basically, a few months here, end of last year and beginning of this year. Eventually, we got that test. We got the test 2 weeks ago. The market is hovering around that weekly long level there, and it's holding so far. So a bounce, a continued move higher, which we can see or infer from the market as the way the market has behaved around this 94.50 or 94.30, would actually anticipate a move higher. So Canadian dollar, I was confused when you said second target 216 the other day. We'll get into that, Todd. We had those gaps on Sunday morning that skewed the picture, but we're going to review that. Let me finish the dollar index because this is very, very important. So we had participation at this weekly level here. The daily is coming back into it. We'll need to see whether this market continue lower. If this market continue lower, the dollar is basically done, and people who don't believe that the dollar is very much under pressure should keep into mind, in account, where the dollar has been in the last 20 years. All right, so you can see very clearly this is a series of lower highs and lower lows, and if this market loses this level, I believe it's this area here of potential participation long. I believe that there will be no one stopping this market as it continues lower here. So I believe that there's not going to be anyone at 990 level to support price, which means that all the markets which are related to dollar, starting from euro dollar, could actually benefit from this move lower, meaning that they might move higher. Okay, so, and that brings us to the euro dollar. There is a potential participation short on the dailies at 113.50. I think the market gets there and the dollar strengthens, this market, this becomes a great opportunity to enter 113.50 into at least 111.43, and this level might not hold in that case. Okay, but if we if we want to look at the two setups there, if the 93.40 holds for dollar index, this is going to move the dollar index into 96.64, and that could correspond to this 111.43 if that 113.50 trade. Okay, so for this week, this is an important level to keep on your radar. If this trades, and we never buy or sell this level blindly. I use the FibStalker timing technique that helps me to study the sequence of measure moves on the smaller time frame. If that fails due to participation of the shorts here, we're going to look at a short into 111.40. Okay, US dollar Japanese yen first, Todd, and then we will get there. We saw this market as anticipated last week on Thursday, It has participated. One thing I've told you on Thursday, actually it was Wednesday evening, that we didn't know whether this high here would hold, but this market was trading clearly into extension shorts here. So got a participation here, free trade, then stopped out that trade at break even, and then the market went to test this area, but eventually got participation on the downside. What happened is that the market opened with this huge gap here. It's now responding again at the 4-hour short for a potential continuation lower here, right? And again, if the dollar index responds higher, keeps responding higher to the weekly area, you should see this market continuing lower into the target of the daily level here, and that's much lower here. Okay, the level would be 106.81 and 105.50. So I used 106 Todd because I was talking about, of course, the US dollar Japanese yen. You were asking US dollar Canadian dollar, so that's the reason I mentioned that 106. My apologies on the tweet. All right, I was thinking of US dollar Japanese yen here. Now let's review what happened to US dollar Canadian dollar, which has initially respected the extension that we provided last week. In fact, on Thursday and Wednesday, it has offered a risk-free trade. However, what happened on Sunday is that we got this, gap higher. And if you were disciplined with hard stop, you would have taken, not lightly, but certainly doing the right thing. I mean, getting after a free trade, taking maybe half one unit of risk in losses is something difficult to do, but it's in these conditions and with Forex, it's always the right thing to do, because and that's another comment that I'll do in a moment here. Okay, so normally the thing you would do, first of all, I mean, where this market stopped to the 50% of the previous measured move, right? And that would have been the next logical level. That would be the one level that would have supported your strategy there. Okay. The on Sundays during the weekend, if there are no huge news, geopolitical wars, and things that can keep moving price in a certain direction, it is sensitive to wait, especially if the loss is not big, right? I mean, if you had that stop here and you had a risk-free trade here, above at this level, price at this level would be break-even. Price, price moved against you for 2 half unit of risk, so 1 full unit of risk. Okay, so when you were here, if you were managing risk properly, you would be at a resistance level, the 129.80, and you would have a paper loss of 1 unit of risk. So let's say if you risked 1%, took half off, you had 0% risk here, 0.5% risk here, 1% risk here, right? So it pays anyway to think in terms of percentage of risk rather than fixed pip risk, percentage of the account versus fixed pip risk. I never look at a trade using fixed pip risk, which for me does not even make sense, because 20 pips in a certain market almost guarantee a stop out. In other markets, even it's even too big of a risk, right, of a pip risk. But that's a discussion that we will leave for another day. So you could be here and see this market initially moving lower and say, okay, the gap is going to be closed, and then this market starts moving against you, and here you had maybe 0.5% of risk. Now you have, sorry, 0.5% of pivot loss. Now you have 1% of pivot loss. But if you knew that this was the next relevant level, the 50% retrace from previous swing highs, then that would have helped you, and you would have been less nervous about holding this trade. This market then again continued moving in your direction, and then again tested the level. Second test worked. At that point, you could be more relaxed. Okay, so this was an important test, though, because now we know where this market is going, do we? So Todd, it was difficult to stay, but it was very, sensitive and very well played, although sometimes can be difficult. But if we know some of this level can be easier. So where this market is going? Well, I have no doubt where this market is going, because there is a target that has not been hit here, and that target lines up with the second target of the inner move here. Todd is saying I lost some hair. And it's understandable, although you should be always trading at a risk level that is comfortable for you. If you're trading at a risk level that makes you nervous, probably you're taking too much risk. Hi Pankai, yes, the show has started already. The show started exactly 23 minutes ago. Welcome in. And we were talking about US dollar, Canadian dollar. So where is this market going? If you want to take partial profits, 126.32, but I would suggest at this point you keep this trade. Now that you did the heavy lifting, Todd, I suggest you actually stay with it and bring it to 124.80. 124.80 is your target there. Okay, it doesn't really make sense now that you held this trade, knowing that there are weeklies who are pushing this price lower into 124.80. That would also suggest that US dollar actually fails, right? The US dollar index. But be careful in doing this kind of consideration. You should only be doing those kind of consideration versus the euro dollar, because the euro dollar, it's about 60 to 64% of the dollar index, and we know for sure that they trade one against the other. But the US dollar, Canadian dollar, sorry, the Canadian dollar, it's only 8 of 6% of the dollar index, so should be very, very careful in doing anything. Anything. So Todd, your target is 124.80, and you can celebrate now. So that's great. So hi K7, Pankai, I hope you found your way around here. And Todd saying I was, but didn't foresee that gap. Nobody could. Todd, nobody can foresee what's going to happen when the market open on Sunday. So the point is, we should not only rely on luck or only rely on good price moving in our direction. If you felt nervous, maybe the size was too big, the risk was too large in terms of percentage of your account. So okay, I think you like that target there. Okay, so, and if you're bold enough, you may even stay with it and try to bring this price into 120.50. That's where eventually this market is going to move, and your your entry point may well be above the next area of participation of algos. So the weekly is working in your direction, Todd, and that's great. Have you seen the stochastic RSI for the US dollar index? It still indicates that a bit more downwards potential could be possible. Hi K7, I don't look at the stochastics. I don't think it has a better predictive power than any other indicators. In fact, as you can see, I don't use indicators, so my answer is no. But if anyone has done that, please comment on K7 view here. I will not comment on that, as I don't choose that indicator. Actually, I try not to use any indicators at all, because I believe there has to be a lot of work to reconcile them with price. I mean, reconcile them seriously, meaning that knowing each and every configuration of the stochastic and compare it to each and every configuration of price. Then I would think of considering it. But I also believe that there are better indicators to do that if you want to use indicators. All right, so that's my view. Todd is saying I put faith in the levels. Thanks, Todd. I think you have more than now of proof in the last few weeks and months that these levels actually, are relevant. Hello. Hello, Leadon. If that was what you wanted to say, I mean, that's okay. Otherwise, welcome anyway, and welcome to Adinda, Todd, Sinatra, Pantelis, Dion, Marco, Leib Lopez, Pankai, AA, Planet 372, Matthew, JM, Carey, hi Carey, KA7, and the Grace. Thanks a lot, the Grace. Thanks a lot for joining in today. So we reviewed the euro, US dollar Japanese yen, the US dollar Canadian dollar. And if you have any preferences, guide me, or else I'll just continue. And let's review the Canadian dollar Japanese yen, which we have not reviewed in a while here. And as usual, I'll start from a weekly time frame here. We mentioned that this market had the potential for a retrace, and the reason for that is the sequence of measure move on the short side had failed. That's not alone a reason for a bounce, because there's no participation, no 50% below this price. Plus, recently the 50% short here has also traded. Okay, now this market is in a lateral move on the weekly time frame, and lateral moves can be consolidation and reversal, or consolidation and continuation. All right, so at this point the weekly doesn't tell us a lot. It only tells us that this market is moving laterally here. And Todd is also asking New Zealand dollar, US dollar. We will review that later on after this market. So in this lateral move, what we can see is that the 82, 83 level here has failed initially. It's failed again. Shorts seem to be in control. However, in the last 2 weeks, the 83 level has been working as well. So the most immediate, if you're in a long, the most immediate level where we could see some sort of participation on the short side is going to be 86, and that is also a good target for 300 pips here. For any of you who have traded the 83 level there. Okay, not easy to trade, especially on this gap lower that we had on Sunday here. Obviously, this market is moving higher here into 86.10. That would be an area I would be looking for to see whether this lateral move we're having on the weekly time frame, and see, which can be seen on the daily time frame, is going to be resolved. And at this point, the only way to resolve is to get well above 86 into 87.80. That's not what I anticipate, though. This market is still a lateral move, so 86.10 becomes a sell here. Of course, again, I tend not to sell these levels blindly. I want to study the sequence of measure move as the market gets into the level, and at this stage, this market is extended on the upside here, on the long side, on the daily time frame. So if you're trading this market, 86.10 could be a level where to take profits and possibly, potentially, initiate shorts back into 83 level. That's my review lead on for this market. If you have any other questions, just feel free to ask. All right, let's do a quick time check here. It's 7:30. So I'll have time for one or two more markets. I'll start from the New Zealand dollar, US dollar. Interesting market, not very technical, but continuing higher into that 75.20 area we have mentioned some time ago. Why is that happening? Because this market has participated not once but twice at this very important 63.80 level, 70 level, and we saw that participation here around September, October. Sorry, that was the full month of September last year, and then he participated again this year in January. Here we saw that participation. And that suggesting us that this market can make it all the way, believe it or not, into the 75.23. Now, those who have been following the room for some time know that we had the very participated and interesting trade here. That was 22 days to trade, for this market to trade into its target. It's not clearly visible here on this time frame, but we will show it on the daily time frame. Exactly 22 sessions, and every day we analyzed, we enjoyed, or we suffered with this trade until, from this point here, February the 15th, 22 session into its target at 68.50, 300 pips, 22 days. It's not our normal trade, but that's what happened there. And this market, after hitting the first target, has not behaved very technically. And for those who kind of know my work, know why we were looking for a sell around these highs here, which actually, we saw price moving lower for a number of days here. And that's one of the patterns that I teach and also use in the FibStalker methods. What that market did, interestingly enough, it came very close to trade the next measure move here from the previous level, which is not it's not typical here, but this market came at came close enough here to this level, which was capable of pushing this price higher. So I wouldn't be surprised to see this market. And again, we were not anticipating that, so I will never claim that. While we could claim, and I showed this in advance as well, this trade here in this market, this trade here, we claimed that it was a 50% level. It could be timed. nicely. It took a lot of time to get to target. I'm not representing that. I have anticipated this other level here. The reason why I mention it, because when you know what's going on and how algorithms are placed on the larger time frame, well, as well as on the smaller time frames, you can anticipate targets. And so if you can anticipate targets, you can also try to anticipate what might happen next on the smaller time frame. That's very, 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 very important to me, because it might give us opportunities on the 4-hour time frame. Okay. And so this market is actually moving higher here, and we know that there is a second target of an inner move which lines up with the first target of that of that larger move there. Okay, so if the market corrects, let's say, and offers a new 50% retrace, we know where we can trade and where we can bring that target to. All right, so what I'm trying to say here, if the market for any reason finds profit taking at that 0.7050 level and then comes back, sorry, I mentioned the wrong level. If the market for any reason finds participation at 0.70 and then comes back, you want to pick that market up at around 68.80. That's the next level where algos would be ready to pick up this price. Only incidentally, this level lines up with previous highs. That's not the reason why, in my belief, algorithms would actually, price would actually reverse at that level. Again, for this to happen, what we're saying is that the market continues a little bit higher here and reverses around 70. And if it does, there is a level that we want to keep into account. And we want to note and keep in our and keep in our in the back of our mind. Now, that said, another model is not suggesting that this is the last move higher for this market, right? And this market is strong enough here. I don't anticipate it's going to stop at this level. I anticipate it's going to continue higher into potentially, this 70.50, which is the first target of the larger time frame here. All right. So this should give you a little bit of perspective here on this market, and certainly this market eventually is going to face some profit taking. Not yet. We're not there yet, and it's been very, very technical on the 4-hour time frame as well. Next target 70.60 there. So if you are long this market, there's no reason to. There are very good reason to keep trading this market on the upside. All right. So it's 7:40 here. So what I'll do, I'll start a review right now, a summary of this session right now, and also for those of you who joined late. So we started from the SP 500, and we mentioned the fact that, as we mentioned last week, there was an area of potential participation starting at 235. We saw participation of price. We got these two huge days of buying. If you're asking yourself who's buying this market, the majority of volume is coming from big corporations who are buying back their shares. It appears here that in the last year and a half, there was a lot of distribution, so a lot of retail traders selling, not believing that this market could continue higher, and these stocks were actually picked up by the corporations that are buying back. So that means that this market is still in a good shape. And I mentioned one target, 2089, 2 weeks ago, and the market went just one tick, 2088.75 from that target level. So congrats to those who stayed. The market doesn't end here. I think this market is going to continue higher. We then quickly review gold moving laterally is still on top of support, and silver on clear support at 1480, bringing price into the first target. All right, so when the market gets into this 1660, that's the time to take a little bit off of it. Doesn't mean that this market cannot continue higher, but we could see some sort of profit taking. That could be even very, very small and brief, but still we are going to get into, you know, we are going to get some profits here. So Greg should be very, very happy. Not sure whether Greg is on the call, but I'm sure he's going to be very, very happy. Then we reviewed the euro, the dollar index, and we mentioned that the dollar index is still on top of that weekly long, daily uncertain. If this area gets participation, another level you want to watch on the daily time frame is the opposing long here. That's something that you're going to see how the market behaves there. The market it is there, and if the market bounces off at these levels now, it's probably, very probably, nothing is sure in the market that the 96.10 could actually be retested there. The US dollar Japanese yen as well, this market has gapped down after responding to that level, which is area that's starting at 109.30, which is going to be retested here, and we will see whether this market is capable of pushing this price higher. That will depend on what the dollar index will do as well. That applies to the euro dollar as well. There is a level that has not been tested yet, the 113.50. If the dollar index bounces off of that 94.30, we're going to see probably this level trade and bringing this price into 111.40. We then reviewed US dollar Canadian dollar. This market has pierced during the open gap open above the previous size, putting our risk-free trade at a jeopardy. You know, you could decide to exit the trade or wait and see how it behaved at the 50% level. It stopped at that level and it's now continued lower into 140.80. That's the target for this trade. And we reviewed the Canadian dollar Japanese yen. We mentioned that this market is moving laterally on a weekly and daily time frame, and we're going to see potential participation profiting at 86.10, where this market could offer another opportunity for a short. And finally, we reviewed the New Zealand dollar US dollar, which has moved very nicely at the mid of February into, after 22 session, into target, and now is trading another level that we could not anticipate, but it's pushing price higher into 170.60, and this is very good because it's going to give us, if this market continues higher, even if we do not participate in it, we have quite a good handle now on this market because we know where it is moving, where it's moving to. And this is great because this might be an extension that brings price into 72.20, and then we can keep trading this market on the upside because the potential for this market is still higher. The potential for this market is all the way into 75.30. So there is still a lot to be taken in this market if an opportunity is offered. If an opportunity is not offered, we'll keep trading on a smaller time frame, or we'll keep trading other markets, and that's not a big deal. All right, so this is it for today. I hope you liked the show. Thanks for participating. Thanks for your questions. I will see you tomorrow at 7 p.m. EST. and bring your pairs, bring your interest. If you like what you have seen here today, please tweet about it and tweet your trades as well. If you have any questions during the day, you can tweet it. Typically, I will look at it. I'm not very active during the day on Twitter, but if I see it, I'll try to give you some directions as well, or simply what I see in the market. So thanks a lot for being here. I hope you enjoyed the show. Again, if you find it interesting, please tweet about it. Let's have this show grow so we can have more participation and more exchange as well, and other interesting views on these prices. Thanks a lot, and as usual, I'll see you tomorrow. Just before I go, I just want to remind that I'm enrolling for my what is that? Let me see. I'm enrolling for my coaching program here. If you are interested and you want to get involved, you just let me know. It's my coaching program at the 4th edition now after 3 years. It's been very successful, and I had a lot of students, getting involved and learning to use these levels for their own benefits. And I'm very happy about the work that has been done so far, and the way most of my students have totally changed the way they look at price and trading the market, and most of all, managing risks. So thanks a lot, and I'm going to see you tomorrow, and have a great weekend, day, afternoon, or evening, and I'll see you tomorrow. Bye bye now.